Hello there, how you doing? It's your favorite realtor here, Toma Johnson, and today we're going to talk about something extremely important that I know a lot of people don't want to talk about, and that is the importance of credit for first-time home buyers. Your credit score is one of the determining factors that banks and lenders use to qualify you for a mortgage, a home loan. And a lot of people tend to try to ignore it if it's bad or if they don't have any. I want to take this time today to talk about the importance of it. So the first thing you should know about the credit bureaus is that they are not government agencies. As a matter of fact, they're not even called credit bureaus. They're really called information reporting agencies or credit reporting agencies. And that means that you can't get in trouble from them. They can't sue you for anything or anything like that. All they do is report information about you, and that information is reported from other companies, and so they can report that debt that you owe them to these third-party companies. The main consumer reporting agencies are Equifax, Experian, and TransUnion. And they are extremely important in your life because these three companies report information about you to financial institutions. Now, the reason your credit report and your credit scores are important when it comes to qualifying for a home loan is because these financial institutions, these lenders, are trying to determine your credit worthiness. For you to understand this, sometimes you have to look at it from the other side. For certain, these companies do not know who you are. You are mainly a name, first name, last name, sometimes middle name, a social security number, and a birth date. And that's all they really know about you. So in order to find out more about you, they use these third-party credit reporting agencies. So it's very important when you're doing business with other companies, like for instance, other credit card companies or loan companies. Maybe you have a car note that you're paying on a monthly basis. If you have a few credit cards, or maybe you have loans or a few department store credit cards, it's very important for you to, number one, maintain all of your payments on time. That's the number one factor, is do not miss any of your payments or do not be late for any of your payments, especially not more than 30 days. Because if you're late for more than 30 days, they will report that information to the credit reporting agencies, and that will create a negative effect on your credit report. And that negative item on your credit reports will cause your credit score to go down. So what is a credit score? It's basically a mathematical equation that these companies use to determine how much of a risk you are to them if they extend you credit. And it can go anywhere from as low as, I believe, 450, maybe 400, and it can go all the way up to 850. Of course, 850 is the top of the line, best credit you can have. And, you know, being in the 400s is pretty much curtains, right? You don't want to be 400. Now, these are very easy reports to fix or manipulate on your behalf if you understand how they work. Just so you know, you can access all of your credit scores, and mainly your FICO scores. The Vantage score, which is commonly seen on some credit cards when you're checking your score, as well as Credit Karma. The score that lenders use to determine your credit worthiness is actually the FICO score. There's several companies that give you a free score check with FICO. If you see the words FICO, that score is closer to what your real score is, or at least closer to what lenders will use. The Vantage score, which is what Credit Karma uses, is not necessarily accurate, but it is helpful to tell you, where you're going or where you need to be, because, it's a quick way to access what information is on your credit reports. Another thing that's important is that you actually look at your credit reports and you look at your credit scores. And all three of the credit reporting agencies have a way for you to access them directly. So you don't even have to use Credit Karma if you don't want to. You can go directly to TransUnion or to Equifax or to Experian. Just hit them with the .com at the end of that, and you can go directly there. You can sign up get a username, and they will ask you 4 or 5 questions to make sure you are the person that you claim to be. And then once you're locked in there, you can view your actual FICO score. They will give you your FICO score from each of the 3 credit bureaus, and that's all free, right? So you do not have to pay for anything. You can get that free if you sign up with usernames with all 3 credit reporting agencies. There's also a way where you can get a 3-score credit report if you don't want to do that individually. I use My Score IQ. I will leave a link in the description. But you can use My FICO. There's several companies that you can use to get all 3 credit bureaus, and they give you a FICO score. Going back to why it's really important to have a good credit score, your credit scores and your credit report are your reputation, are your business reputation. And it's important because other companies need to know, especially if you're asking them to do business with you, they need to trust that they are going to be paid their monthly payments or be paid all of their money back. Every single one of these companies that lets us as consumers borrow money, they want that payment back. Of course, they want to make a profit off of it. That's why they're lending you the money. So you make them a profit by paying interest. But at the end of the day, they want to be paid that money back so they can continue lending it to consumers. The more that you're on time and making those payments on time, the more your history starts stacking up, and the higher your score goes, the more that they trust you. Before I go, I want to talk about what is involved with qualifying for a loan and the factors that they use. Number 1, they use your monthly household income. So I say household income, meaning all the borrowers who are going to be borrowing the money to purchase the home. So it could be you and a spouse, you and a partner, you and a few family members. It could be 2 people, 3 people, however many you need to combine to get the monthly income that you want. Now, I happen to know quite a few people who make very good money but have a low credit score. So what happens is you may qualify for it income wise, but you won't qualify for it credit wise because your scores don't add up correctly. So that's why it's important to make sure you have a good credit score. How they use that credit score is they take the middle score of the 3 credit reporting agencies. So for instance, if you are a 680 and a 670 and a 655, then your middle score is going to be the 670. That's the score that's going to count. That's the score that they are going to use to determine your eligibility for the loan, what your interest rate is going to be, and everything, right? If there are 2 borrowers, then they're going to take the lowest middle score of the 2 borrowers. If there are 3 borrowers, they're going to take the lowest middle score of the 3 borrowers. And all borrowers have to qualify for the loan. So for instance, if one of the borrowers does not qualify for it credit wise, then they can only use the borrower who qualifies. Understand? So it's important for everyone to have their score in order. The other thing that you need to understand is that you can't combine the 2 incomes. If only one person qualifies, you can only use the 1 income. That's why it's so important to make sure you have the right credit score. So what everyone in your family needs to understand, and what you need to understand, is that credit is important. Most people who have bad credit that I run into don't have enough. It's not good to have 1 or 2 lines of credit. It's really more important to have 5 plus, even 10. Now, I know we've been taught in the past that credit is bad, but it's not. If you manage it correctly, if you know how to manage your finances, and if you just change a couple spending habits, you should be able to manage your credit just fine. Usually the scores that they're looking for is 620 or more for your middle score, right? If you really want the best interest rates, it's important to have 680 or more, but you can qualify for a loan with a 620 or higher. The last factor that I want to talk about is your debt to income ratio. The amount that you'll be able to afford is determined by your income and your debt ratio. Meaning, if you make $10,000, but you have $5,000 in monthly payments involved with your debt, then you would not be able to qualify for the loan because you have too much debt. So your payments that you have to pay on a monthly basis cannot be more than a certain amount, right? So you need to make sure that the money that you make is a lot more than the money that you have to spend on your monthly debts. They don't include your rental payment that you're making, right? So that's good, but they do include things like your car payment, any loan payments that you have to make, also any credit card payments that you have to make. So if you have high balances on your credit cards and your payments are $300, $200, that $200 or $300 is going to count towards your debt to income ratio. So keep that in mind. If you can, before you try to qualify for a house, try to pay your debt down to at least 10 to 20%. Try to keep those payments as low as possible, because those payments calculate into your monthly payment, or at least what you're able to purchase. They will take your monthly income and they will calculate the highest monthly payment that you're able to pay for your mortgage. And then they will include taxes and also insurance. And with that number, they will determine how much home you can buy. Your credit score matters, and your income matters, and your debt to income ratio matters. So keep all that in mind when you're trying to qualify for this loan. So just to recap, the 3 credit reporting agencies, not bureaus, but agencies, are Equifax, Experian, and TransUnion. If you would like access to your credit scores and what's on your credit reports, you can contact those firms directly. You can go online and contact them directly, create usernames, and you can see your scores and your reports free of charge. You don't have to pay anything. If you would like a simpler way to do it and you want to get a 3-score credit report along with credit monitoring and identity theft, then you can sign up for any number of companies. I use My Score IQ. I will leave that link in the description. Also keep in mind that Credit Karma uses the Vantage score. They do not use FICO score. And lastly, your income and your debt to income ratios matter when qualifying for a loan. And if you'd like to know more and get an idea of exactly what you need to do in order to qualify for a loan, you can speak to a lender directly. We have preferred lenders that we like to use. We'd be more than happy to refer them to you if you'd like to speak to them. You can also sign up for a free, no obligation consultation to talk about your home buying plans, and we'd love to help you out there. So don't forget that portion. And that's it for today's episode. If you have any questions, comments, please feel free to reach out to me directly, or you can leave a comment and I'll be more than happy to answer those questions in the comments area. I'm looking forward to the next video. I hope you are. And also, please remember to subscribe, hit that like button, and click that notification bell so that you can be notified when I drop my next video. Thank you so much for watching, and we will see you next time. Peace.